In today's video, I want to teach you a very easy trading strategy that can make you money consistently. At the moment, we are on 1-day time frame, but this trading strategy can also be used on lower time frames. This is the price chart of euro to US dollar, but no limitation on this, and you can use this trading strategy on any other asset or market, whether it's forex, crypto, or stocks. In this trading strategy, we have two indicators. The first one that we want to add is MA band distance monitor, this one, which is written by someone named Hassan Rifat. Alright, this is the indicator, and basically nothing new or complicated. It's just a combination of two moving averages with some information about the distance between them. Here in its settings, you can see that by default, we have a slow moving average with length of 200 and fast moving average with length of 50, and both of them are simple moving averages that are calculated based on closing price. For our trading strategy, these default settings are perfect because we're going to use this indicator for trend identification. So we continue with the default settings. This is our fast moving average. I mean the lower part of this band is fast moving average, which is set with length of 50, and this is our slow moving average with length of 200, and you can see that it's moving farther away from the price action. When the faster moving average crosses above the slow moving average and stays above that, the area in between becomes green, and it shows that we are in an uptrend. And in this situation, the price also moves above the band, and when the faster moving average crosses below the slower one and stays below that, the area in between becomes orange, and it shows that we are in a downtrend, and in this situation the price moves below the band. These crossings can give us signals on the reversal point of the market. For example, here it could be a buy signal, here a sell signal, and here a buy signal. But it's not always like this, and especially when the market is in a trading range like here in this part, we can have many false signals. So if you want to use these crossings for identifying reversal points of the market, make sure that you are also using other indicators for more confirmation. In our trading strategy, we use this indicator for trend identification, and we don't use these crossings for entering a trade. So when the band is green, we look for long position opportunities, and when the band is orange, we look for short position opportunities. Here we have also a table that shows the current price distance from both of fast and slow moving averages, and also the average of the two. Knowing about the distance of the price from moving averages helps you to evaluate the strength of trends, so you can avoid false signals. In times that the price is near to the slow moving average, like for example here, or for another example here, where the price is near the slow moving average line, this situation shows that the trend is weakening, and in this situation the band also becomes tighter because the moving averages are crossing, like here as you can see, or for another example here. In this situation, we don't take any trades. I will show you examples later, don't worry about this. And the next indicator that we want to add is Andean oscillator, this one, which is an editor specs indicator and written by Alex Grover. Alright, this is the Andean oscillator, and we're going to use it with its default settings, and it will help us to identify increased momentum during trends. Everything is already set on the chart, and before we start the strategy, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, as I said, we use this moving average band for trend identification. When it's green, we look for long position opportunities. For example, from here it became green, and if you look at the Andean oscillator, you can see that the green line is already above the red line and the orange line. We must wait for a pullback to enter a trade. When the price touches or goes inside the band, it shows that probably we are having a pullback, and by the help of the Andean oscillator, we can find out when the pullback is ended. When pullback happens in Andean oscillator, the green line goes below the red line, so we wait for the green line to go below the red line, which shows a possible pullback in the market, and then we wait for the green line to cross back above the red line and then crosses above the orange line. You can see that we have this condition here and also here. The trade is confirmed when the green line is already crossed above the orange line, so we can enter a long position here as this new candle is opened. The stop loss for this trade is placed below the previous swing low, and the profit target at the level that makes risk to reward ratio equals 2, and you can see that this trade was a profitable trade. Moving on the chart, here you can see that the green line again went below the red line, showing a possible pullback, but you can see that the price continued going down and even crossed below the band, which means our uptrend is in danger. Here you can see that we have our green line crossed above the red line, and then it crossed above the orange line here. At this point the band is still green, but you can see that the band is very narrow. The distance between them is very small. Just compare it, for example, with this part. This is telling us that we have a weakened upside momentum. So this signal is rejected and we don't enter any long position here. And you can see that after that, the price actually turned to a downtrend. And from here, the band became orange. When the band is orange, it shows that we are in a downtrend. So we must look for short position opportunities. In this situation, we wait for the red line to go below the green line, which shows a possible pullback. And then we wait for the red line to cross back above the green line and then the orange line. When the red line is already crossed above the orange line, the signal is confirmed and we can enter a short position here as this new candle is opened. The stop loss for this trade is placed above the previous swing high and the profit at the risk to reward ratio of 2. Alright, moving on the chart, you can see that here again the red line went below the green line, showing a possible pullback, and then it crossed back above the green line and then the orange line. So the short position signal is confirmed and we can enter a short position here, and you can see that this trade is also a profitable trade. Shortly after this trade, you can see that again the red line went below the green line, and after that it crossed above the green line and above the orange line here at this point, providing another short position opportunity here. So in case if we miss this one, we could enter a short position here at this point. Moving forward on the chart, here again the red line went below the green line, and after that it crossed back above the green line and then the orange line here at this point. So another short position signal is confirmed and we could enter a short position here, and this trade is also a successful trade as you can see. Moving forward on the chart, here you can see that the red line went below the green line, but before going above the orange line, you can see that the green line went above the orange line and we had actually a reversal here, and the band also turned to green here at this point as you can see, and we didn't have any false short position signals around here. Here the band is green, so we must look for long position opportunities. We wait for the green line to go below the red line, and then we wait for the green line to cross back above the red line and then the orange line. So here the signal is confirmed and we could enter a long position based on this signal on the opening price of this candle, and we continue like this. Please pay attention that although this trading strategy has very high degree of accuracy, but it doesn't mean it generates 100% guaranteed signals. Losing trades are always part of the game, no matter how accurate is the strategy or how much experience you have. You need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use for trading. I have a complete guide on this. The link is also placed in the description of this video, and I highly recommend you to watch it because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.